The mortgage process itself is actually split into two parts: the decision in principle and the full application. We're going to cover off what both of these involve in this video. This is Mortgage Dad trying to give you some background information and knowledge on the mortgage process so that you're empowered when you're sitting in front of your chosen professional. There's no advice here, purely information. Decision in principle, arguably the most important part of the process, because this is what you need before you go out and start house hunting. A decision in principle basically means that a lender will have done a credit check on you, they'll have done an affordability check on you, and they'll have done a criteria check on you. The credit check is hard and fast. They'll have used Experian, they'll have used Equifax, and they'll have married up your credit history with their criteria to determine that they can actually lend based on your credit history. The affordability check is based on the information that you or your mortgage broker key into the application. So it's important at this stage that you understand the lender's criteria, because lenders will look at different sources of income in different ways. For example, you round up your income to the nearest £1,000. That's not going to give you an accurate affordability outcome, but the lender's not going to check pay slips at this stage. If you're using a mortgage broker, ideally at this stage they will have asked you for a pay slip, they will have asked you for a bank statement, and that way they can see how your income's broken down, so that when they submit the decision in principle, the income figures and the affordability figures, and therefore the lending amount, is accurate. But that's not always the case. They'll also have done a criteria check, just again based on the information that you or your broker key in. That's things like how long you've been in your current job, what kind of employment you're in. They'll have looked at things like your debt to income ratio, how much you have on car finance, that kind of thing. It's not a hard and fast guarantee, but ideally what you would hope for at the end of the decision in principle process is that the lender will come back with an outcome that says something along the lines of subject to valuation, subject to confirmation of the information that you've provided today, we are prepared to give you a mortgage of X amount. Now, it's not a hard and fast guarantee, it's basically a decision on the day based on information that you've provided. So it's not something that you can completely rely on, but it's as much as you can get, because no mortgage lender will accept an application before you've actually found a house. So it's a bit chicken and egg. But it's a very good indication that when you come to put an application in, that lender is going to accept your full application. Once you've done that, well, congratulations, you've got a house. Scary shit. Then you can put in your full application, and that basically just kind of fleshes out the information that you've provided at decision in principle stage, but it's supported with a whole bunch of documents. Now, it's kind of important to sort of relay at this stage that just because lender X has given you a decision in principle, that doesn't obligate you to actually putting the full application in with that lender. There's a whole bunch of things could have changed in the meantime. Rates could have changed, the amount of deposit could have changed, your criteria, your circumstances could have changed. So you can shop about again at full application stage, just to make sure that the lender that you choose to progress with is giving you the best possible deal for your circumstances. But your lender, your broker, will sit down with you and they'll look into what you want from the mortgage, what your circumstances are going forward, what you want to get out of the mortgage over the next few years, and they'll look at the products and the lenders that are available to you on that day, and base a recommendation of which lender to progress with on that as well. But it is key to emphasise that you've got choice at that stage. You can move to whichever lender is suitable for you. Your broker's going to look for pay slips, they're going to look for bank statements, they're going to look for proof of ID, they're going to look for proof of deposit, they may look for accountant's references or employer's references, they'll look for proof of address from you, and all of this kind of goes into the full application mix that goes into the lender's underwriter. They'll marry that up with a whole bunch of background checks that they do. And all being well, probably after a few kind of back and forwards with different questions about things that are on your pay slips, things that are on your bank statements, they'll come back with a formal mortgage offer, and that is you fully approved. that's the stage where you can kind of uncork the champagne and start to celebrate and breathe a little easier. Any questions you've got about this whole process, put them in the comments. More than happy to answer anything that you need to make the whole process more comfortable. And good luck.